Thank you. Thank you very much. Um, so I'll have the responsibility to try to condense a couple of $1 trillion into 10 minutes. So obviously there's going to be, if there's specific questions about a certain fund, please let us know. So first slide, wanted to go over the fact that there's been a federal response. A lot of people have heard about the CARES Act, but there's actually been four phases of legislation that has passed on the federal level. The first one was the Coronavirus Preparedness and Response Supplemental Bill, which was around $8.3 billion. That was at the very first stage. Sounded like a lot at the time, but clearly was not to the extent that we needed to have a more robust response. The second was the Families First Coronavirus Response Act. This increased money to the Medicaid program, which we'll talk about a little bit later. It also made changes in law to medical leave and also SNAP dollars. Yeah, right there. The third phase is the CARES Act, and that's the one that has gotten the most media attention. We're going to dive into that to the greatest extent, but the CARES Act was roughly $2 trillion that went to local governments, medical providers, small businesses, and individuals. Phase four just recently passed. That was an increase to the hospitals and providers, roughly 75 billion, added to an already $100 billion program. It also increased the small business loans that had already been emptied out by companies that had requested these funds. Lastly, we're going to dive into future legislation, and Michael Bradshaw is going to share a little bit about what we see coming out of the feds in the following weeks. All right. So the CARES Act. CARES Act was a bill over 800 pages, $2 trillion. It affected individuals, and that was the tax credit that everyone got, almost everyone, depending on your income, that started off at $1,200 for an individual. Joint got $2,400. It also bolstered the unemployment insurance. So the individuals, as we're seeing in Tennessee, over 400,000 people have filed for unemployment, added $600 and an additional 13 weeks to that program. It also included that many business provisions, one being the small business loans that I just spoke about, added 349 billion that it got zeroed out pretty quickly. It also added into some tax credits. Funding for healthcare providers. Many of these dollars go directly to the provider. So I'm going to talk briefly about what the state is going to be administering. But funding for providers, this was over $100 billion. Some of this money, about 2 weeks ago, 30 billion of that was already distributed to providers based on a formula that I think many are trying to understand more on how it was calculated and why providers got a certain amount compared to others. Funding for state and local governments. One of the bigger programs was $150 billion, the COVID-19 relief fund, that went directly to state governments based on the size of the state government and potentially a few local governments as well, depending on their size. We're going to go in deeper to that in the next slide. Lastly, want to point out educational funding. A piece of the CARES Act was the Education Stabilization Fund, which was really looked at as three buckets: a K through 12 fund, a governor's emergency fund, and a higher ed fund. The state administers all these funds, but for the K through 12, I'm going to explain a little bit later how that will affect directly local governments, and they'll be getting the larger portion of those dollars. All right. So Tennessee funding share. I think it's important to realize that before the CARES Act passed, the Tennessee legislature was in session. They had the wisdom and the foresight to see that it was coming, and they knew that they had to in order to be safe, pass an emergency budget and leave. They plan on coming back. But before they left, the CARES Act had not passed. The legislature, the original budget before that they were looking at had basically they had over projected, and they were projected to get close to $1 billion in over revenues. When this hit, they shifted funds close to $1 billion, and they downgraded the projections. They downgraded their projections for fiscal year 20 and so the current year right now, and for the next fiscal year, they projected basically a 0% growth. So in order to balance this emergency budget, they shifted it's really closer to $900 million. They put money into the emergency fund, the rainy day fund, and they put more money to local governments, and they created a COVID-19 fund. Those dollars have not been spent. So after they left, the CARES Act passed. Tennessee's portion, so the money that will be actually in the state government's hand, is close to $3.7 billion. Now, this does not include the FEMA money that I'll explain later. And most of this money has strings attached, so it's really a pass-through. But some of these funds, the state will have the flexibility to spend the dollars where they need. The biggest one is what I explained earlier, the Coronavirus Relief Fund. So Tennessee in general got closer to $2.6 billion, but the state has $2.43 billion that they're in charge of with that fund. Those funds, I'm going to explain in the next slide where they can possibly be spent, but that is the largest pocket of dollars that really there has not been a plan that has been released to the public on where those dollars are going. I explained earlier the Education Stabilization Fund. Right there, the very first point is the $260 million. That's K through 12. 90% of those dollars have to go to LEAs. $170 million for higher ed. The next one is TennCare and health. I combine those two. The TennCare is the recognizing that actually wasn't part of the CARES Act, it was part of the previous federal law that is going to increase the FMAP percentage increase to the state. So one of the first things they saw was we're seeing an issue. We don't want Medicaid program to be harmed, so they increase that match the state will get. Lastly, I'm going to go into the economic community development piece that the state will be administering that local governments should know about. So I briefly touch on the Coronavirus Relief Fund. In general, it was $150 billion to state and local governments. As I said, the state's going to receive about $2.43 billion. And with that, there are limitations and guidelines. And these guidelines just were released by the Treasurer's Office, Department of Treasury on the federal level. But they're very broad. And I think the states have flexibility as long as it's actions, and this was in the guidelines, actions taken to respond to COVID-19. And they can also spend dollars on secondary effects, economic support from those suffering from unemployment or business interruptions. Now you have to be directly impacted. In the guidelines, they can't be going towards businesses that weren't directly affected. The one limitation, which it's hard to determine how to do this, is these dollars can't be used to fill budget shortfalls, so that aren't directly impacted by COVID-19. And in the guidelines, it said the funds must be necessary, but it also says necessary is meant to be broadly used. So the state has the ability to spend these dollars in response to COVID-19. It did lay out certain things that these dollars cannot be used for. They can't be used for the state's share of Medicaid, damages caused by insurance, or damages that would be covered by insurance, payroll or benefit expenses for employment not substantially dedicated to COVID-19. So, and one other piece that was in the law was these dollars that are being spent could not have been accounted for in the previous budget that the state passed. And anything that they're going to spend dollars on, it has to be in relation to March 1st, 2020 to December 30th, 2020. So this is the biggest pocket of money that I think the legislature will be trying to come up with a plan. They're going to take input from the legislature, and there's going to be many in the community, provider community, that will want to see these dollars go to their certain entities. Touch briefly on some of the other funds that I think that local governments and the state should be aware of. I mentioned the K through 12 funding. So $260 million the state is getting for K through 12. There are guidelines, or there are things in the statute. This must be in relation to COVID-19, but it's broadly used. So the state has to fill out an application to the federal government. The federal government sends the funds to the state, and the state subgrants it to each LEA, with ensuring that it meets those guidelines. The federal government has suggested that they don't want to tie the hands of the state, so they want the state to be able to use the dollars where they feel necessary. Now, 90% still leaves 10% that the state will have. And also the state had a governor's emergency fund that will be used for just education. That's around $64 million. Economic community development, I wanted to mention, and it's actually CDBG, the Community Development Block Grants that were in the CARES Act. There's going to be around $16 million that local governments can apply for. That's increased funding from the state that ECD will be in charge of, just like they are today, which many local governments do apply for. The other piece, Department of Health received dollars for community health centers. This is close to 25 million. The total program was 1.3 billion in the CARES Act. So community health centers across the state, which there are some in Shelby County, will be getting those dollars if they haven't already. And the Department of Health is charged with distributing those dollars. I mentioned the TennCare funding, and I think that the reason why we wanted to make sure everyone was aware, this increased match is around $270 million more that the federal government will be giving to the state. In order to get these dollars, though, the state has to agree not to put more regulations or requirements on individuals trying to get into the Medicaid program or kick individuals off. So the thought is increase the funding and put it through a pass-through that is already in place. And with this, it'll make it easier for the state, because we do expect the state to lose state revenues going forward. Three other funds I want to briefly touch on that I think local governments most likely are aware of, but if not, they need to be. One being the $850 million program, the Vern JAG grants for law enforcement. These are also dollars that local governments, local entities in the correctional facilities or law enforcement can obtain from the Department of Justice in relation to COVID-19 related expenditures. So this can be hiring, PPE, equipment, and it can also be used in correctional facilities. Applications are due 5/29 on that, and distributions are already being made. I mentioned the FEMA disaster relief earlier. This was the $45 billion program that was in the CARES Act. It is a program that is already being administered by FEMA, and it's for immediate needs. It's for response to COVID-19, and you're going to see that over and over. It's for PPE. It's for the medical community that they can already apply for, but it's local governments can apply for it as well. you would use the same process that is in place now for FEMA disaster relief. Yeah, 45 billion in an ordinary year would be a large amount, but it's one thing that's kind of getting overlooked because it's not the 150 billion in the other big relief fund, but 45 billion will have a big impact. And these funds, what you're hearing from the state is they want to make sure that local governments or nonprofits, whoever is eligible, are going after these dollars first. So with the state dollars, what most likely we're going to see is they're going to wait to see all the funds that the provider community or governments have gotten before they have to spend their dollars or decide where to spend their dollars. Lastly, fire grants, 100 million more administered by FEMA. This is for the fire departments for PPE and equipment as well. So I'm gonna stop there and let Michael touch on the next phase or what we predict the next phases of the stimulus packages to entail. Michael, you're on mute.
Says, can everyone hear me? Can you hear me? Okay. I'll talk very briefly at a very high level about some of the federal initiatives designed to address some of the cash flow and credit concerns of local governments, but also states. One initiative that's already in place is the Municipal Liquidity Facility under the CARES Act, which was designed to pump liquidity into the short-term municipal bond market. This program has been evolving fairly rapidly. You'll see in the PowerPoint that eligible issuers were states, counties with a population of 2 million and cities with a population of 1 million. After we submitted this PowerPoint presentation yesterday, the Fed came out with additional guidance that bumped those limits down to 500,000 and 250,000 for counties and cities respectively. Another proposal that you all might be aware of that's been floating around up in DC would provide as much as an additional 500 billion in additional direct grants to state and local governments. Obviously the devil's in the details, and this would be done under an allocation formula that's yet to be determined, but could possibly take into account such things as population, a number of COVID-19 cases, and revenue losses. But you also might have seen that this proposal could face some resistance from some members of Congress as well as the administration. So just next slide. Some other additional state and local government proposals that would address cash flow and credit issues. Unlike and in contrast to the direct grant proposal, these will not require any additional direct appropriation of federal dollars. One would be to restore advance refundings to allow local governments and states to refinance existing debt to realize interest cost savings. As many of you are no doubt aware, under the Tax Reform Act of 2017, we were relieved of our ability to use advance refundings. Another proposal would be to restore and expand American infrastructure bonds. These would be similar to the direct pay Build America bonds that were very successful in 2009 and 2010 in allowing states and local governments to tap the larger taxable capital markets to fund infrastructure. A third proposal would be to provide for tax-exempt long-term working capital borrowings to address cash flow shortfalls. Under current law, really the best you can do is tax-exempt is to finance working capital for about 12 to 13 months. I think some of the proposals will go out as long as 2 or 3 years, which would obviously be beneficial to governmental entities with cash flow needs. And finally, there's proposal to increase market access for small borrowers by increasing the bank qualifying borrowing limit from 10 million to 30 million. This was also used in the stimulus back in 2009 and 2010 and was very successful. Finally, states and local governments are not going to be able to rebuild the economy on their own. They're going to need help from private industry, private businesses. Another unfortunate thing about COVID-19 is it seemed to have had a disproportionate effect on low-income communities. There are a couple of existing incentives in place that already are targeted at low-income communities. These are the Opportunity Fund program and the New Market Tax Credit program. There are proposals out there to expand these programs as well as to target them to low-income communities that are that have suffered disproportionately from COVID-19, as well as at industries such as healthcare facilities and healthcare device manufacturing facilities that need to be utilized in the effort to fight the COVID-19 pandemic. Finally, infrastructure was already a need before this happened, and there have been proposals to relax some of the private business rules that would allow public-private partnerships to utilize low-cost tax-exempt borrowing. And I know that I went through that very fast, but if there are any questions, would happy to answer them.
Thank you so much, you two. We really appreciate that. I want to do a sound check. Can my panelists hear me? Thumbs up?
I can.
Okay, great. So with that, we will turn it over to our attendees and just see if we have any questions from the group. All right, we have one question coming in. All right, David Ford, you are up.
Yeah, do we know how much funding Shelby County Schools will get in the K-12 space?
I don't have that number, but I believe the Department of Education does have the formula where they will know the dollars to each LEA, to the local education agency. And I'm not sure that they have released that, but they're the ones that, based on a formula, will have that based on